I don't think you're sharing computer sound, but that's okay. It's a little bit quieter start to the halftime report.
Well, my sound was, it sounded great over here.
Well, no, I got no sound on my end. Did you, Mark, Frank, did y'all have sound?
No sound on my end.
Well,
No
I checked the box, so my apologies.
We all know the song by heart, so.
Well, yeah, it should have just been playing in your head.
Everyone out there, just imagine you just heard the starting beat that gets you hyped up for the halftime report.
Here, I'll just recreate it for you. That's all I got.
2020 tackle trading bringing you technological incompetence.
Well, I'll take credit where credit.
Oh, welcome out, everyone. It is January 3rd, 2020. And obviously, there's some big news on the horizon. Markets don't seem to care. The only thing that really seems to care is oil, airlines, and Lockheed Martin. So if you haven't followed the news, there was some the U.S. did some strikes on 2 Iranian leaders that were in Iran in retaliation to the embassy strikes. Mark, are you up to date on this news? You want to fill the crew in
as
on what
much
happened?
as you're. Well,
as I was saying in the lounge this morning, all of a sudden I am a foreign policy expert.
I know, seriously,
no
right?
time at all.
I read 2 articles on CNN, so let me give you, the poli-sci, international.
You are the doctorate poli-sci here, so let's hear it.
Well, I mean, whenever you have geopolitical turmoil, it's a pretty simple formula with the markets. Without being crass, war is generally good for the economy. Certainly good for certain sectors of the market. I mean, pull up LMT, for example. I mean, you're going to see boost, especially when it deals with Middle East conflict in a couple areas. You're generally going to see aerospace and defense companies get that catalyst news bump. Now, LMT already had a beautiful technical setup. Nice, clear resistance area, breakout today. So you have a combination of a news event plus a nice technical pattern. Not surprising, we're seeing what is that? That's almost 4% bump on the breakout. You're also going to see oil get a bump on geopolitical conflicts, especially when they deal with the Middle East. Where there is a threat to the supply, even the theoretical threat to the supply is going to provide a tremendous boost to oil. So you're going to see crude oil futures up a little bit. Without getting into all of the nuances, because this isn't a political show, just realize that the market, these type of things, these type of events, I mean, how many times has it happened in the last 20 years? An airstrike, an attack, something in the Middle East. It's happened a ton. It is usually not a disrupting influence on market conditions, on existing market conditions. It might cause a 1 or 2 day bump or a 1 or 2 day slide, but unless it is prolonged, unless it escalates, which I think most of us hope it doesn't escalate, contain, keep America safe, do what's necessary to protect our interests. But unless it escalates, these type of news events usually fade into the background quickly in the market. But if it did escalate, that's not necessarily a bad thing for stocks. And I don't want to be cold and crass and narrow it down, but that's what we're analyzing, right? That's what we do. War is traditionally
war is bullish. War
is a bullish condition. For the markets.
Let me put it to you this way, Mark. And again, it's as a trader, you just try to think about cause and effect relationships and, how can I make money at this? Think of all the good things you can do with it. I was watching, first last night, I had a handful of alerts go off. My text messages started blowing up. And so I knew something was up right away with the markets moving. And when I figured out what the news was, the first thing I thought was, well, oil's probably going to spike.
I mean,
then the second thing I thought was, ooh, an LMT is probably going to break out. And
yeah, I mean,
eh,
I mean, it's one of those things because it's always, you don't want to be cold-hearted about it, but as a trader, I mean, what do we teach you at Tackle Trading? Not necessarily with war, but with everything. Removing emotions, removing opinion, removing, you know, these like knee-jerk reactions to your trading and investing, because that is sound advice in all conditions, in all situations. Removing emotion from your analytical decision-making process. And you have to do it. And I guess, you know, when you've been around for as long as we have, there's, you know, a lot of experience on this show right now. It just becomes second nature. Like separating your political beliefs and your desires for humanity and your desires for other individuals from your decision-making process with the stock market. And I will maintain that that is good, solid advice that you should maintain the rest of your life. You just have to do it. You just have to do it.
Yep. The market does not care about anybody's opinion.
well, and money is just a tool at the end of the day. That's all it is.
Yep.
And, you know, when you get this, I mean, this creates some
exactly what it is. Money.
geopolitical risk. You know, my initial concern was, well, this could go either way. This could be bullish for the market. It could be bearish for the market. It all comes down to that knee-jerk reaction. So I watched those futures trade overnight, and I was particularly interested in the European Open to see how the market behaved. And so I actually stayed up late enough to watch the European Open. And I saw that little hammer come in and the markets rally after the news broke. It was, you know, pretty steep sell-off. Like news broke, boom, you know, you got a pretty steep sell-off overnight. And then as soon as the European market opened, you got a small rally. And then around, 6 a.m. Eastern, as your London banks went, you got a rally. And then right into the cash open, boom. And Frank and I were joking about, you know, checking the futures and seeing how they behaved. When I saw them at the cash open popping up, I figured the market was going to shake off the overnight downward movement, at least to an extent. So, you know, here we are.
Well, it's all just an overreaction. When you first hear the news, before we actually know details of what happened, you just see the main headline. You know, U.S. airstrike in Iraq, Iranian leader, 2 Iranian leaders dead. When you hear that, immediately tensions go up because we don't know any details. No one knows any details. So that initial reaction is just to the first break of the news, and then as the details start coming out, and you actually get real experts, not Twitter experts, that come in and start talking, giving a little bit more detail and insight as to what happened and how it happened and why it happened. That's when you start to see the immediate overreaction start fading out of the market. Or if the details are worse, then you start seeing an adding effect to the initial reaction.
Well,
But
yeah, I mean,
you just got to be able to watch these things and trade it.
well, and you can't, I don't think it's fair at this point in time to predict the outcome because it's still, I mean, at this point, you know, you look at the candlestick from the daily chart, it's got that hangman type candlestick look to it. After a little bit of slowing momentum, this could lead to more selling. You know, it could recover and continue on the bullish path. You know, there's certain sectors are going to benefit from this. We watched oil pop, and if you know, switch gears and take a look at the price of oil as it behaved with the reaction to this, you know, same kind of thing. It popped up overnight. Let me break that down to like the 5-minute chart. And then boom, right there, you can see it, you know, just rips up overnight, a little bit of sideways drift, you know, at the European Open, rose again. And then, you know, here on the US cash open, market dropped a little bit, you know, shortly afterward. Now we're getting a little bit of retracement, but you can see just how quickly that responded to the news, like instantaneously, you know, boom, off to the races. So, yeah.
I mean, let's look at this from, okay, if this leads to Armageddon and the whole world is destroyed, nothing matters, right?
Yes.
So it doesn't matter what we're talking about, doesn't matter what we're doing, the whole world's in a ball of flames, and all of this nonsense that we're spending time talking about doesn't matter.
Well, you know,
all right.
Jesus is coming by puts.
But if, so what are the other two scenarios? This is a prolonged conflict, or this is an isolated incident that might have a few flare-ups and then nothing comes about out of it after that. Well, if it's an isolated incident with a few flare-ups, well, then nothing matters. Like the reaction, all of that, things go back to normal. But if it is a prolonged conflict, I mean, go back and look at the S&P. Cody, put up a 20-year chart, monthly candlesticks. I mean, we have in the last 20 years under modern markets a prolonged conflict with the U.S. involved in the Middle East. So, I mean, we have a huge case study of market behavior. Post 9/11, huge sell-off in the market after the terrorist attacks in 2001. But look, as the Iraq war goes on from 03, 04, 05, 06, 07, I mean, that is a incredibly robust uptrend during those years. You know, really steady. How much of a company's business is done in the war areas? Well, in the case of Iran, very little, right? Now, if it escalated to other countries, maybe a little more, but very little. You know, how much of Apple's business, how much of Microsoft's business, how much of whatever insert company here. So as far as actual company growth, actual company revenue, actual company business, how much is done, how much is impacted by a war in said country? I mean, these are the type of things to think about, like before you do something really foolish with your own portfolio. I mean, that knee-jerk reaction, I mean, you guys see it all the time, right? Like whatever, it doesn't not just with war, with all kinds of things. Like news headline comes out, market sells off or market goes up, you know, based on what, algorithms and a few day traders?
Yeah, pretty much. I mean, it really is. I mean, it's earnings at a larger scale is what it is. Because individual companies, we tell our students not to even try to directly trade earnings because it can pop either way. Thing is, though, these type of news headlines, we can't plan. I mean, we can, but we don't know when they're going to happen. Those are the times that you need to make sure you have a diversified portfolio. You make sure that you're not over leveraged in one sector. I mean, you can see technical breakouts like you were talking about Lockheed Martin. Sometimes these events help you. You could have been selling puts on oil this entire time, and this news headline helps you. And
we lost Noah to the. He's another. He's like. Noah's had. We've had an abnormal amount of technical difficulties with tackle trading coaches' computers this week.
I'd say
they're all drunk and hungover from New Year's Eve parties.
The computers are.
No, but like in our brains, we are trained, and not even trained, just by habit. When we see negative news, new traders, they see negative news as far as, hey, war's negative. I think 99.99% of us would agree that a news headline involving war creates negative emotions. Would you agree with that?
Yes.
Yeah.
Yeah, I mean, there are a few sickos that would celebrate it, but you know, as a general rule, we don't like those type of headlines. And so naturally, a new trader, when they see a negative news headline, immediately assume that that's negative news headline for the market. And Frank, does the market think that way?
No, I mean, I put it like this. We all interpret that information and we come to an opinion. All of us do, right? We're people, we have opinions. What tends to happen, though, I believe, is we assume that the market and everybody else shares our opinion. And then all of a sudden, well, we all know that's not how it works, right? You've talked to other people. And so that's why you have to be so darn careful with that. It's not just your opinion. We all have that bias. It's very easy to fall into the trap that everybody, they know I'm right. I'm Frank the Tank. I'm always right, right? So, and it's something we all have to be very, very careful with, quite honestly.
No, I mean, you make a real jump as a trader and investor when you stop thinking like yourself and start thinking like, how does the collective market think?
Yep.
What are they thinking? And you don't have to necessarily agree with what the market is thinking.
No, it's fine to disagree. It's fine to want to sit it out or whatever. But and again, that's why that technical analysis is so very important, because do you really think that, I can't get into the mind of the entire world, the world of traders. I know there's some crazy ones out there. But the charts kind of filter that out for me. Right, they kind of filter that all out for me, and then when things kind of line up to say, okay, Lockheed Martin breakout, for example, that wasn't just a nice breakout, that was a beautiful breakout, right? We've been watching that one together on Twitter and the halftime report for the last couple of weeks. When we get that nice clean break, and then hey, could this area being in the defense industry benefit? That kind of backs that up. So we're not using that as the reason necessarily that we're buying into Lockheed. We're taking the chart first, and hey, that can't hurt, at least in my opinion. Maybe I'm dead wrong. It doesn't look like I am today, at least, but that's how I think you always have to think as a trader. I really do believe that you have to get your opinion out of it, and it's hard because we're like I said, we're people. We all have opinions, and we all generally think our opinions are the right ones, right? But the market
we
really
back the
doesn't
data.
care.
The cognitive dissonance is real. Whenever you have an opinion or a feeling towards something, and a news event like this happens, your brain immediately filters the information that agrees with your opinion. And it's one of the reasons that, when you do look at the political spectrum, is that some people they'll see the same event, the same headline, the same news, and they'll interpret it two different ways. And that's the cognitive dissonance of proving your own bias. And as traders, sometimes we do it as well, that we'll see a technical pattern and we'll make that trade, and they'll be like, look, oh, it happening because of this and this. But we need to use the rules and just look at it technically, and not let our emotions take the trading aspect out of it.
No, the traders fell for a lot of reasons, a lot of different reasons. But, high up on that list is that they can't get out of their own way. Either they're too smart, or they're too opinionated, or they think they know too much, or they're like, well, this is what should happen. The market's cold. You can go debate politics with your neighbor and win every debate in your head. You're only going to win the debates
and
with
they walk
trading.
away feeling the same way.
But you're only going to win the debates with trading. That the market agrees with you. So
is that number green at the end of the year, or is it red at the end of the year? That's who was right more often, and the market is typically always right.
I mean,
whether
when
it's up
we're
or down, sideways, the market's right.
I mean, Frank, how many times? I mean, because you and I will occasionally talk to a student who's struggling, who's having a hard time. And how many times when we ask them to analyze their trade, does their opening sentence begin with, "Well, I thought."
It's way too much, way too much. That should never be the answer in my mind. It should be, we were, coming off support. I went into the 15-minute chart breakout, whatever it was. That should always be the first answer to that question, because then we can build off of it, right? That's why journaling is so important. That's why knowing, okay, this is when I did it, this is why I did it, is so very critical, because it's hard to find someone else's mistakes. It's very hard to find your own, right? It's a lot easier for me to point at Cody and say, Cody, what were you thinking, than it is for me to point at myself and say, what was I thinking? And that, again, kind of comes down to being people. But you're absolutely right, Mark. There is no doubt about that. That is one of the, well, I thought it was cause reason. And we do want to think if this, then that. That is important to be able to think like that as a trader, in my opinion, at least. But that needs to be, again, we're traders, so we're trading technical price action, right? If you think marijuana is going to be the next big thing and go invest in, one of those companies long term, that's a different discussion, right? And 20 years from now, we can talk, well, I thought, right? And maybe you're right, but the charts, when we're trading, we have to be listening to those charts first, second, and third.
No, and you can have a premise. Let's say you have a premise. Let's marijuana, for example, whatever it is. I have a belief. I have a thought. I have an opinion.
Sure.
Those things are great.
Those are fine to have, sure.
I mean, but the action you take as a trader, you can have all of these premises and be waiting for it to happen, should be based on a signal.
Yep. I'm interested in buying X or into X industry or sector when I get this signal. Not
Yeah.
today, just because, oh, I'm finally a believer. And when you know your signals,
Trade
Yeah.
off of facts and backfill with emotion. Don't trade off emotion and backfill with facts.
Yeah, I mean, like if I think marijuana is going to go up, that's great. And if I think marijuana is a robust industry, that's great. But the signal to get you in should be a bullish technical signal.
Yep.
That should be and this is what differentiates traders and what we do at Tackle Trading from long-term investors like such a Warren Buffett, who will just look at fundamentals and say, based on this whole different criteria, I'm making these long-term decisions.
Sure. And they could be the right decisions too. So you wear two hats, you really do. And you have to be careful to know which one you're wearing. You wear your trader hat, you can wear your investor hat. You'll wear both hats, but generally you're wearing one at a time, right? You look pretty ridiculous running around with two hats on.
Right, and so let's say you disagree with me that war, like, oh, I think for whatever reason, go back to the S&P, go to the SPY. Just go to the SPY. Like, Mark, I think you're full of crap. I think this is really negative for the market. All right, you got a premise. You now have a premise in which you are looking to base decisions. Well, what is the signal then that will cause you to act upon that premise? How many times in the last 2 years? What's been the biggest pain in the butt storyline over the last 2 years?
It's been trade war.
The trade war. Yeah, trade war. Time and time again, this popped up. How many times have traders went out and done negative things because of a trade war headline? Like a ton. Just a metric ton. We can have negative premises or news headlines, but what is the signal to justify your action? Because your opinion isn't enough. I haven't met anybody whose opinion is good enough to be their trading signal. They might exist. They might be some Rain Man, just absolute feel for second level thought out there. But your opinion is not that is not a trading signal.
Yeah.
So when you analyze the price action today, Frank, let's say you were living in a cave and you just look at the price action today. Didn't know anything that was going on. What would you see?
I would see business as usual. Continue to be a bull. Yep. We've held support on the S&P 500 index. Still in an uptrend, still probably is at the 9 there, above all of the moving averages. So if I know nothing, which is generally the way I try to approach things, is pretend I know as little as possible. Let's say, hey, as long as that support that Mark or Cody just drew that line on there, as long as that holds, then this is very bullish in my mind. If that gives out, that's not bearish. That is, though, a bit of a bearish signal. That would be the first, quote unquote, bad thing to happen. And that would be where, depending on how I was going to approach things, where I would hit stop losses, I would make a bearish trade on the S&P 500 chart still at that point. But again, that is just me. So that's how I would look at it. Oh, support's held, a little pullback still going. We did gap for whatever weird reason. We did gap down on the open, but nobody cared. Big, strong candle here today. That's where my head would be.
Now, and let's play the flip side. Let's say you were going bullish. Like, oh, I actually don't think this matters. I'm looking to place a bullish swing trade. What kind of technical criteria are you looking at in that scenario?
When I'm looking at something like this and I'm that close yet that far away from resistance in the form of yesterday's candle, I prefer to use the break of that in this case yesterday's candle as that signal. That would be my preference because just because of the way that we gap down here on the open. Yes, we've had a great fire back. That's a really good candle here today, but we're that close. If we had more room from where we are today to that resistance, then above today's high could be in play. But because we're so darn close, I would say, well, I can, get the continuation and I can get the momentum through resistance as my signal.
And everything you explained there is spot on, like dead spot on. And is the type of analysis and looking at a chart you should do, whether there's a huge geopolitical conflict or there's nothing going on. Still looking at those support resistance levels, learning entry signals, I mean, that's how you do it.
That's how you
That's
should
how
do
you
it.
do it.
That's how you should do it.
Noah,
Yeah, and
I'm glad that you survived the drone strike
glad
by Iran on
he
your
made it.
computer.
Yeah, and glad to have you back, my friend. Yeah, and Tasha, to your question, like Mark was kind of saying, we can build our premise. Okay, I believe this is probably going to be affected positively or negatively based off of whatever the news is, right? It's okay to have the premise. We just don't want to trade off of, oh, this is going to be good, I'm going to go buy, right? If I think this is going to be positive, I'll look for opportunities that match my technical criteria that would exist, whether or not that was a premise in the first place. Does that make sense? So again, we can't get rid of our opinions, and nor should we. We're all entitled to our opinions for sure, but we don't want them to be the determining factor for our decisions. So if hey, that's interesting, for whatever reason, Lamb Weston beat earnings, broke resistance this morning, is still running. Okay, well, that was good. A good earnings report. That's LW if you want to look at the chart. That was a good report in my opinion. I'm interested in buying. Oh, I just broke out of some resistance. If I'm a day trader or looking at intraday entry, I could get in there. So it really is kind of an if this then that. Our thought process takes us to the areas, and again, it could be for whatever reason, right? It doesn't just have to be today's news headline. It can be whatever reason that leads us, and then we turn to our charts for our decision making.
The if then that premise is exactly how you trade, and it should not just be for entry. It should be for management as well. If you have a stock that you're already in, whether it be a directional play like this or even a condor or a credit spread or something, you need to know where those levels are of if this then that. And
well, and I would argue that goes into your watch list as well.
Absolutely.
Again, some of it takes a long time, but we've talked a lot about Lockheed over the last couple of weeks, and the whole was I don't want to mess with Lockheed while they're in this consolidation, but I'm very interested if they can break through that resistance. So for weeks on end, it was just look at Lockheed, not today, look at Lockheed, not today, right? And so we can apply that to so much of our trading. And you're right, Cody, at least in my mind, that is a critical skill for traders. So we're not thinking, oh, do I buy Lockheed today? Well, if I'm not in Lockheed, what's the if this then that? We might have different ones. Maybe, hey, continuation above today's high. Maybe Matty would be looking at a trigger on a 15-minute time frame. Knowing Matt, that would probably be how he would be looking at it. Maybe I want it to consolidate or pull back. Think about what you want. It's so much easier to manage a watch list if you've thought about that stuff. So you don't always feel like you're looking at something cold.
I think the number one that comes to my mind when I think of the if this then that our students have struggled with, my mind immediately goes to the Iron Condor on the right, where a lot of our students understand how to put on the Iron Condor, but then when you end up with breakout like we had before, that's the signal of if it breaks out, then we roll the wings out, then we pull off the top side, then we manage the trade. But knowing that if portion and then the then portion is where the crucial trade management and a true trader knows what to do. For every strategy you get into, you need to know not just how to get in and how to get out, but you need to know when. You need to know the technical signals, if this then that. And I think that's a fantastic topic right there is understanding that premise. 3 words: if this then that, or 4 words.
It's Friday.
No, I mean, trading really can be easy. It's the traders that make it hard. Like it's just that simple. So we're entering a new decade. Let's evolve.
Let's evolve and learn. Speaking of which, let's take a look at our major indexes here, Cody, as we move on. See where they're
we've already
taking
been
us
staring
into
at
the
the
new year.
S&P.
So we looked at the S&P. And
I
usual.
I don't see much difference in these charts. As a matter of fact, I really liked the move on the Dow yesterday. Today, obviously, it rejected that news. So yeah, next trading signal I'm looking at is just above today's high.
Just above that resistance.
Because that was a kind of a high base break yesterday. Today's news shot it down. Intraday with that long candle, we know that it rejected that news, and basically after the dust settled, everyone calmed down. So the trade's still there.
I also like a pullback to 28,000.
Oh, I think we'd all like a pullback.
Oh yeah, I think a pullback would be, and I wouldn't be surprised. We're getting into, it's next week. We just got a couple of names, but the week after, I mean, we're almost in earnings season, and generally, you know, things to get a little back and forth in earnings season, right? As company A has great report, company B has a terrible report, you know, as we kind of work through the earnings season. So I wouldn't be surprised if we do see a little bit more of that as we work into earnings, and that could be a part of it. But yeah, absolutely, a pullback would be perfectly in play. Absolutely.
I would love myself a pullback in this bullish market with all the fundamentals and things that have happened with the Fed and non-QE and all that stuff. We've talked enough of that in depth. I'm not going to beat a dead horse again. But when you think about that environment and how much extra cash has been put into the market, that cash is still flowing into the market. It's still flowing into stocks. It's still flowing into these type of investments. So when you get that type of signal, it's still a bullish market, hands down. I don't see anything that's going to cause us to go bearish.
As of today, technically on the chart today, I can't see any logical reason to think that that is the case. Now, something like that might develop in the days to come, but as of today, I would agree with that.
And even with like Mark was saying in the headlines, you know, we don't necessarily like war, but war is still bullish. So just if there ends up being a big war in the Middle East, that's really not going to drive this market down. So understanding both the technicals and the fundamentals is a key aspect.
Absolutely. How about our NASDAQ? I mean, again, when we get into a market like this where we've ran as much as we ran, a lot of charts tend to all look the same, right? And our index is not much of a difference at this point in time.
And something else that we talked about a lot as we were waiting for the rut to join the rest of the sectors is continue to say over and over and over. We really know that we're moving into a strong bull market when the small caps start playing catch up. And we got that. It was a very clear signal when it happened on the 25th of November. And then if you missed that one, it gave you a nice breakout pullback. Breakout pullbacks by hands down are my favorite signal because it just shows it broke out. And it just gives you that secondary confirmation that it really does want to run. And with the rut playing catch up right now, I'm even more bullish. All right, moving on to the U.S. dollar. Let's see how the U.S. dollar played with this news. U.S. dollar, I got a lot of lines on here still, but I think this is still in play. My analysis from a pay range from here to here, second pay range there puts us right at 96.
At the $96
we got that bounce off previous resistance. We got a hammer candle today. Or I guess that'd be a shooting star, but shooting star has to be the top. It's a pivot.
Yeah.
I'm still projecting it's going to go to 96. I'm bearish on the U.S. dollar.
I think that's probably the clearest technical read there. You know, it's the dollar can be choppy, as you know. It's you're the big Forex, one of the big Forex guys around here. But yeah, when I look at this, we violated support already, and we did kind of rally back above it. But you know, we violated it, right? And so that's an important thing to note in my mind. A little bit of downward movement. Don't really have any support. We do have some at 96 where you've got your target in play, and I think that's certainly an area worth keeping an eye on. But we continue to show overall lower highs and lower lows right now on the dollar, and so it can't be that bullish, right?
Nope. And I love the intraday here. Immediately, my curiosity said, okay, what's that intraday look like? And it's got this lower low, lower high, lower low, more kind of a bear flag right here. Day trade opportunity right there, break below that flag.
Yeah, I could see it.
So moving on to oil. Oil obviously got a huge pop intraday from the news. It's kind of pulling back, and actually it looks like after this news is settling, I'm seeing kind of an intraday flag, bear flag as well. I can see this thing settling right back to where it was, down in the 62, 62.50 level. But I'm going to pass this on to Mark because
I mean, the problem is you can throw intraday analysis with geopolitical conflicts in oil out the window.
Yep.
Like it is very natural for pop and pullback. I mean, that on the day's news. The problem is if you have an escalation, what's going to happen tomorrow with oil? Like it's going to jump.
Well, nothing tomorrow because it's Saturday. But
well,
if it jumps tomorrow, Mark, I will be so shocked.
Listen, I'm probably the rare soul that wishes the futures market was open 24/7 every day of the week. So, like most people are like, it's good to have a break. I'm like, you all people have lives. I don't. So
Hey, I actually agree with you when it comes to the Forex market. There is Saturdays I'm forced to step back and actually do other things than trade. But there are definitely times that I'm like, man, I wish it was open, especially if you get a Friday signal, and I'm just like, I can't enter it. It violates my rules because the market's going to close Saturday and Sunday. I'm like,
Yeah, see, that's the most annoying thing on the futures market to me. When you see something nice on a Friday, because I'm the same way. It's hyper inflated on natural gas, but it's on, I don't like to set up trades on Friday as a general rule. It's not my personal favorite thing to do. So I'm the same way.
I mean, we've had a few geopolitical conflicts in oil. You always do because the world is constantly,
big world,
especially, but you've seen like it helped put a floor, geopolitical, I think it was tanker attacks back in late May, June, helped create the support level that we now enjoy on oil. I believe the spike in early September, that huge spike, was a geopolitical conflict. And, you see a pop today. I mean, you'll almost always see a bullish initial reaction when there is an incident involving the Middle East on an attack, because it threatens to disrupt the supply of oil, which is bullish for oil. Whenever you have supply pullback, whenever there's less oil, oil's going to take a pop. But does anyone have any idea what is going to happen in the next week between the United States and Iran?
Nope.
no clue.
I mean, the parties involved might not even
Probably
have an
not.
idea.
Yeah, probably not yet.
Like Trump, Iran, they might be weighing a ton of options without having concrete, this is what's going to happen. So there is immense risk to the upside on oil. Immense risk to the upside for those individuals short, with short positions on oil. Now, if nothing happens, well, we already had kind of bullish conditions heading into this, right? So you're probably not going to see a severe sell-off because nothing happens, because we were already enjoying, kind of upward momentum with the trade war falling to the background, a lot of bullish momentum on oil. But if anything does happen, these things can really put a hurt on individuals that are short.
Yeah,
Yep.
absolutely.
So
Moving
how
on.
you feeling about your bear call there, Cody?
I'm getting a little bit more nervous. I'll go back. Yeah, for those of you who didn't catch that, a while back when I was selling my naked puts, or my bull call spreads, or bull put spreads, excuse me, down here, and then as it ran up and started getting to up towards the top, I sold some up above 67. So yeah, that pop did make me a little bit more nervous, but I have my if this then that rules in place of I know how I'm going to manage this trade. Moving on to natural gas, though, this thing has definitely been continuing in its bearish short-term momentum. Are you getting worried about 210 here, Mark?
Well, I mean, we have a pinch developing. The last time I was on the halftime report and the commodities report this weekend, I said you don't do anything on a bullish side until it breaks that trend line. That trend line remains intact. Well, whenever you see this triangle type pattern, so you have this downward trend line, and I don't know if I'm making my hands so you can see it, and then a horizontal, right there in the middle there, you're going to get a little pinch. And that term pinch we use to describe situations where support and resistance areas are compressing upon one another. So you have one level of technical resistance colliding with a level of technical support, creating this compression. Now, eventually something has to give.
Well, I think the way I put it, Mark, is eventually support and resistance become the same number and then it blows up, right?
And then something has to happen.
That something's got to give.
And oftentimes because compression, I mean, think about compression. Like, I wish I was better at science and I could probably give a great analogy here, but I'm not.
What are you looking for? I'll help you out.
When things are, well, give me an analogy for when there's a lot of compression and it explodes. Like, give me something like that.
That's known as your potential energy. It's in physics. You have your potential energy that converts into a kinetic energy all of a sudden.
You're such a nerd.
Well, that's what it is. So, and there is actually what's known as activation energy. So on a graph of, it takes a certain amount of energy to get something started, but then once it's started, the amount of energy to have it continue starts to decrease. So that potential energy, that activation energy needed, as it increases, it hits a breaking point. And when that breaking point happens, that's when you get the full on reaction. There's your metaphor.
Yeah, well, but whatever it is, the longer it's in a pinch, when something does give out, you could have a lot of price movement to whatever side it breaks out. So,
well, and I think a good way to put it, Mark, because depending on the trader, an aggressive trader might be, getting in as soon as support breaks or as soon as the resistance in this case breaks, right? Might be right in there. The way I put it is that's the signal, right? I'm not a very aggressive trader, so I probably wouldn't be right in there the second that it happened, but that would be our signal. Okay, this, we broke to whatever side. Sooner or later, we will we will pick a side eventually. That is my signal that the bulls or the bears took this one. And now I'll start to look for, opportunities that follow my style of trading.
yeah,
Absolutely.
So, I mean, big moment though. A big moment here.
I'm really liking what I'm seeing on natural gas. And I like selling credit spreads on both natural gas and oil in the futures market. And if this does get a break of that trend line, I'll be looking to sell some more, probably down.
I mean, yeah, that's my signal too.
160.
I mean, that is the signal I'm looking for, and I'll do something.
It's a legitimate signal.
All right. Gold obviously had a pop as well off of some of the news. Gold being the #1 safe haven in the markets, but it was already breaking out prior to this.
Put that on a weekly candlesticks. It will clean it up quite a bit.
There you go.
Well, really quick, before you do that, though, zoom in just a little bit to these last few days. Because when we were talking last Friday, we'd broken above the 50. I believe it was Tuesday of last week, had a 3-day run, and then we kind of went into early this week a little bit of a 3-day kind of ceiling that developed before breaking through there. And we talk, I talk a lot about, I want to see it consolidate, type of stuff. It doesn't necessarily matter how much time. It can be 2 days, it can be 2 weeks, but those are always going to be signals that we can take a look out for. So if we were still interested in gold coming into Friday last week, getting that little few days of consolidation and then breaking out is certainly a technical signal worth getting to know, I believe.
Absolutely. This was a good signal for anyone that was looking to add to their gold positions.
And now we're approaching some pretty good resistance, right? Last time we were up in this ballpark, the only thing I know with absolute certainty is last time we were, approaching this, we got slapped down pretty good. So definitely a resistance zone I think we have to respect.
Absolutely. And a break above that could be a respectable signal as well.
And a bullish and a retracement could be an interesting development as well. So I think gold's kind of in an interesting spot where, a breakout is certainly on the table. A retracement could very much be on the table. If we were to pull back in a nice orderly pullback into, 15, 1520, something along those lines, we have room to run until resistance anyway, right? So certainly something, if you're interested in gold, it's maybe tough to want to buy it. For me, at least, it's tough to want to go buy it right now, but we could certainly see potentially bullish retracement or a breakout signal in the days to come.
Absolutely. Silver, let's see how silver's playing ball as well. Silver didn't get as much of a break. I mean, it had the same break as gold did back on the 23rd, but it didn't follow this news nearly as bullishly. It actually looks like it got rejected if I were to go intraday. Let's see what intraday looks like. That's a little choppy. Let me go do an hourly.
And I think a big part of it comes down to, if you're thinking, defense, you're thinking gold, right? You're thinking gold is the, place to be. Not that they don't generally have some sort of correlation, but.
And in a day like this, without Matt, I'm going to go to the VIX, but I said it in pre-production. I'm surprised we didn't get more of a pop on the VIX. It popped up, came right back down.
Yeah.
And Noah said it before he left us, that the VIX is a broken indicator, and there's a lot of arguments to be made on either side of that, because if the VIX is not reacting to the news like this, or when it does, it quickly corrects itself, I can see a strong argument for it being broken.
I'm not a huge fan of the VIX, but again, if it's a helpful tool, I have no problem with tool is being helpful to people. I just don't find it to be particularly helpful personally.
Well, a tool that I've used since I started is Gino's Arc High Low. And that I think is a helpful tool. And you know what? The rule that he teaches is 2 close days below 50 is when he moves bearish. We don't even have that. We're still at a green candle. There's no signal to switch our bias from bullish to bearish right now.
Nope.
Well, we got 10 minutes left to go.
No, we don't. This thing turned to be 45-minute show a long time ago.
That's
We are 6 minutes over.
We started 5 minutes late though. We're 1 minute over.
So, like, you know, no offense to y'all, but I wasn't planning on doing this show today. I got called in the last second, so I gotta get back to other stuff I'm doing. You know,
Bring out the big guns.
I know you all find us, you know, incredibly engaging and all that good stuff. But if you have any question on today's content, email me at team@tackle-trading. We have our scouting reports. It's going to be a really interesting meeting because, you know, we shared our thoughts. What I really love about our Friday meeting heading into our reports is we have this big, huge news story. The debate back and forth amongst us, because when you have a lot of, you know, interesting minds, I was going to say smart minds, but, you know, I didn't want to give us too much credit, but let's say interesting minds collectively discussing whatever the major subject is. It's really interesting how the thought process can go. And then we try to convey the collective discussions we have in our reports. So on the commodities reports, you know, we'll have an in-depth discussion today. We'll convey those sentiments on oil, natural gas, gold, whatever it have, on the different stock picks, on the sector, on all of our things. So should be an interesting week for the scouting reports, which we will release on Saturday. If you are not a pro member, great time to set up a trial. Go check out the scouting reports for the next couple weeks. See if tackle trading is for you. Email me at team@tackle-trading and I'll get you set up with a link. Or you can go to tackletrading.com and sign up for that free 15-day trial there. And
one last thing, if you guys have not listened to it, the prediction podcast, tradingjustice.com, was released this past Monday. I'm about halfway through that thing. That's a pretty fun podcast. I always enjoyed every year, both the recap podcast of last and then the new predictions for the coming year. I always enjoy that one.
Yeah, I'm looking forward to it. I've been kind of on the road this week, so I'm going to catch it tomorrow here. I'm looking forward to it. So I have more ammo to make fun of poor Tim next year around this time. So, but always a fun podcast for sure. Of course, guys, it's always appreciated if you enjoy the Tackle Trading Halftime Report to give us a like, give us a share, tell your friends about it, help us get the message out. Of course, we're active on the other social media platforms too. You'll find us over on Twitter. A lot of us over there. Come join us. We have a lot of fun, you know, saying hello to each other, sharing some charts. So be sure to join us over at Tackle Trading on Twitter as well. And if you're a Facebook user, I'm not. I'm biased against Facebook, but got a Facebook going on as well. Instagram, some cool stuff over there too. So be sure if you're using any of these social platforms to join us. Love to have you over with us.
Absolutely.
And one last thought, could we make it a national law that these damn holidays, Christmas and New Year's, don't fall on Wednesday?
It made it tough. Yeah, it made it tough.
It disrupts everything.
It does. It basically made 2 weeks of just just wishy-washy kind of work and getting things done. I agree with that, Mark. But I think this year, they're all on Fridays and Saturdays. So that'll be beneficial this year, is that it won't disrupt anything.
That's interesting. Yeah, I'm a creature of habit and routine.
Is it a leap year this year?
This is a leap year this year. We will have.
So that's why it would be 2 days ahead.
Oh, should be a Friday then. Well, Friday can work. That's a long ways away. I'm just glad to get back into my normal routine because I am very much a creature of habit and routine. When things break up my routine, I have a hard time. So, and I'm a bit, if you've joined me in my Monday night webinars where we're talking with new team members, we talk a lot about it because I think we all are creatures of routine. And so I'm looking forward to getting back to 100% normal. So that's for sure.
All right, guys. Well, hope you enjoyed it. Let's definitely get those likes up. We're about 50% right now. I know we can do better than that. We got 2 dislikes, which I hope are just misclicks and not people getting a little upset with us. But we did have to cover a little bit of politics. But on a day like this, you have to discuss how the political spectrum affects the market, because it can and it will sometimes. So we got to go over that. And make sure you subscribe, guys. Ring that bell so that you're always getting content as for here on YouTube. In addition to the halftime report, we're typically putting out 3 videos or so a week, teaching various topics, whether it be a strategy, a hedge, or grammar in the market. Making sure you're understanding. So ring that bell. Make sure you get all the great content we put on YouTube. And of course, if you love what we do on YouTube and you want to join the pro membership, email Mark at tacticaltrading.com and he'll get you set up. With that, guys, we're out.